All right, what's going on, guys? Tremaine here. We got another market review for today, Thursday, May 16th. So, yesterday we cleared this high, all right, which is NASDAQ's, or rather was NASDAQ's current all-time high. We ran that, and this is today's trading. You see, we worked a little bit more into no man's land. Okay, there was no price action above this high because it is an all-time high, and had a pretty nice sell-off later in the PM session and during lunch. So we'll take a look at that in the lower time frame. But before we drop down, this candle's close right here on the daily chart, and this candle's open. While it doesn't look like there's much of a separation between those two price points, there is a small little gap, and that is your new day opening gap. We'll look at that on the next slide, but just keep in mind this candle's close and this candle's open. There is a small little separation, and that is your new day opening gap. So let's look at that right here. And I'm annotating with my cursor here. If you go on your hourly chart, now the new day opening gap can be seen here. This candle's closed on the hourly chart, and this candle's open. Notice we opened lower, so there was a gap right there when we opened. That little gap right there is influential in price, and we'll look at that as we head to the 15-minute, 1-minute chart. You'll see how that was used to frame a few setup ideas. So very crucial to have these levels on your chart. Okay, new day opening gap. Same 1 hour time frame, just zoomed out a little bit. Notice the bodies. All right, respecting that. We wick down, yes, but the bodies tell you the story. The bodies tell you the narrative. That new day opening gap being used as support there. We run the high. This was NASDAQ's new current all-time high that was formed. We run that and then break lower. All right, 15-minute chart here. These gray sessions, this is your AM silver bullet hour, 10 to 11 o'clock. This is your PM silver bullet hour. Is it 2 to 3 o'clock, I believe? 2 to 3 o'clock, if I'm not mistaken. Um, so we have this small little fair value gap here on the 15-minute chart. All right, we open at 9:30, rally up, fail to take out this buy side. So what do? We left equal highs here at the open. This high here, this high here. So opened up, rallied, trading into this fair value gap, failing to take out sell side underneath this low. All right, trading into that fair value gap, rally up, clear the buy side, equal highs, break lower, 15-minute chart, fair value gap, break lower, tagging sell side. Now, how much farther can it go after taking out sell side? Well, what's the nearest inefficiency that rests below the sell side? That fair value gap right there. Smart money shorts above this high. Okay, they sell the buy stops resting above these equal highs. Run that, smart money goes short, breaks down, smart money goes short again, bearish order block, breaks down. Once more, smart money goes short, clearing the sell side. And where can they completely get out of their position? At an area of fair value inside of this fair value gap that's in a discount underneath this sell side here. 5-minute chart. All right, so again, trading down into that 15-minute fair value gap, failing to take out that sell side. We rally. Look at the new day opening gap being used as support. The body's unwilling to close below it. Rally. This is your silver bullet setup. Okay, fair value gap targeting liquidity. That is the definition of a silver bullet setup between 10 and 11 o'clock right here on the 5-minute chart. Notice the bodies respecting midpoint of this fair value gap. That's consequent encroachment. 2 down close candles here. Bullish order block. Entry. Target the buy side. Bread and butter setup. Easy. All right, boom, run up into that buy side, break lower all throughout lunch. We'll look at that at the 1-minute time frame. Break down, large 5-minute inefficiency. This is also a bearish breaker, this candle here with this long wick. We have a high, low, higher high, last down close candle. In between your two highs, that is your bearish breaker. Draw that through, laying on top of this fair value gap. Short, targeting sell side, retracing. Look at the new day opening gap being used as support and resistance. Finally breaking lower and reaching that lower fair value gap. Let's go back right here. All right, 1 minute chart. Again, dropping down into that 15-minute fair value gap. Once more, failing to take out this low. You can go into your charts. We do have SMT with ES. Okay, somebody in the live streams pointed that out. ES made a lower low here while NASDAQ failed to do so. That's something for you to study in your own charts. Failed to make a lower low with the ES, so the SMT trading into that 15-minute fair value gap. Rally, order block. Couple of fair value gaps in here. Drop down, look at the new day opening gap, telling you the story that we're possibly flipping bullish. The body's respecting the high of that, unwilling to close below it, but the wicks still trading into the bullish order block. Rally, down close candle before this displacement, bullish order block. Look at the bodies respecting that. We rally, trade down, silver bullet right here. Because what are we targeting? Equal highs, relative equal highs up here. Silver bullet is a fair value gap to liquidity. Fair value gap, target the liquidity, bread and butter setup. Bullish order block, trading into it there, trading into it deeper. Mean threshold, midpoint of this entire down close candle. No bodies are closing past that. All right, it's being used as real support. We're wicking through it. Yes, don't panic. The bodies are staying above midpoint, okay, mean threshold. We rally, fail to take out buy side, those equal highs. Fair value gap being used as support, clear the buy side. Now, I always mention this. I even said this in a live stream. You could check it out on YouTube. But I wanted to see the buy side tagged before 11 o'clock. Why did I say that? Why is 11 o'clock so important? 11 a.m. 11 a.m. is known as profit taking hour. Okay. If you're in a position, let's say you got long here or here or here, and you have 4 or 5 contracts on, by the time you approach 11 o'clock, you should only have 1 contract on or close your entire position entirely. All right, because 11 o'clock is profit taking hour. Once you approach this macro from 10:50 to 11:10, expect some kind of retracement, reversal, or manipulation like a short-term run on sell stops underneath this low. We run that, and then it's possible to see a continuation if it's reasonable to do so. And then I forgot to address this, but this macro 9:50 to 10:10, okay, trading into that fair value gap, bullish order block, small little fair value gaps in here, all forming within that macro. All right, setups forming in this 20-minute window. Take your profits by this 20-minute window here. All right, 11 o'clock profit taking hour. Last slide here. Quick review over lunch and the PM session. So the lunch hour, all right, 12 o'clock to 1:30. Now ICT teaches that lunch is from 12 o'clock to 1 o'clock, but he has also referred to the lunch hour as 90 minutes from 12 o'clock to 1:30. So take it how it is. That's just what he said. All right. Buy side here, equal highs, equal highs. I mentioned this in the last market review during lunch. All right. I believe Shy asked me if you can trade the lunch hour. You can absolutely trade the lunch hour, but you have to understand its characteristics. Lunch often has some sort of manipulation before seeing a continuation. So if we go back to the AM session, we've already cleared the all-time highs. We're in a deep premium. All right, we're entering that lunch hour. We can expect some sort of retracement, reversal, and attack on everybody who's made money all morning. Okay, that's what lunch does. So if you want to trade the lunch hour, okay, and you're looking for shorts, you understand that we were in a premium. You understand that we ran all-time highs. You understand that traders made money going long all morning. All right, you understand that we're likely to reverse and take out all these profitable traders down here. If you understand that and you're looking to short during the lunch hour, wait for manipulation to occur. All right, you don't want to short here or here. Okay, this run right here above these equal highs, this is typical, okay, during the lunch. Run the buy side, then and only then do we see a continuation to the downside. Look at the bodies respecting that new day opening gap we outlined. All right, consolidate, entering another macro from 150 to 210. We break down, trade up. This is your PM silver bullet. this fair value gap here. I don't have an outline just for the sake of keeping my charts clean. Entry, sell side, done for the day, done for the session. All right, so that's it. Hopefully you found this one insightful. I will do these more often. I'll try to do these every day. I know a lot of you guys find it helpful. Please support these videos by leaving a thumbs up on YouTube. All right, obviously I have these charts annotated for you guys. They do take a while, to create videos like this. So if you're finding these videos helpful in any way, please share it, like, comment, do whatever. I'm pouring myself into you guys, so it'll be much appreciated. If you have any questions, message me in the Discord privately or in the public chat room. I'll get back to you as soon as I can. But subscribers, I'll see you guys in the live streams tomorrow at 9:30. All right, peace.